Greetings, Jedi Traders. David here of TradingFibs.com to bring you the weekly trend for October 6, 2019. As always, please seek financial advisement when trading with your money, as these videos are for educational purposes only. Support your knowledge in the market, see what's going through my head on any given week. Always make sure you have a solid trading plan and always manage your stop when placing a trade. All right, markets are open for the last about 20 minutes here, Jedi Traders. So let's get right into it as we'll just go ahead, take a look at where we are technical momentum-wise, what's coming up this week, and some supporting evidence from other followers that I have that we seem to be in sync as far as where the market might be headed in the short term. All right, taking a look at the charts here on now on the ES, as we could see, price action had a nice pullback here for the first couple days of October here in the trending HA bars. As you can see them hanging out underneath the 5144 on a larger time frame. Again, all underneath the T3 the T3 Tilson moving average, set to an exponential of 8, and then the turnaround here as of this week on Friday, price action bouncing back upside. I'm going to go ahead and appreciate it. Again, we use the Heikin-Ashi bars to give us turnaround in trend or to continue momentum, where we can use that for trade management strategy on the MMLs. And really, folks, what we've got here is a bounce off the 200 back in June that's really just held up numerous times, and we continue to test that, even the MMLs, as they continue to move. And using the short term, midterm to long term as supporting in the market where you started hearing from the mountaintops, recession, and look what happens. Market action pulls up, pulls back, and all on possibility, speculation. But, for the most part, for 2018, we continue to build up here. This is the end of 2018 as we roll through 2019. We're still holding in this midterm consolidation on the ES, and so price action with much more room to move up as far as levels are concerned. We bouncing off the short term in the perspective here, as we can see price action bouncing off the lower MMLs on the short term. Consolidation really is in the midterm, but again, with the turnaround in the HA bars, at least a follow through, hopefully, as price action holds above the VWAP, holds above the 200 MA and the 1050, which we see a pullback here off the MML highs. As we see, as long as price action holding up 10 above 50, we'll go back and test up those upper levels of resistance, and then our next level up 3047 as the setup here on the Heikin-Ashi bars at 2937. Again, great way. You can always intraday, or whether you're looking for the swing, you can pick off the lines, the MML lines, or wait for the confirmation for the trend based on the 5 bars here as well. Looking at the NQ, we are at, again, similar picture as price action just set us up on Friday. Here's the market action pulled back up upside above the VWAP, T3 moving average, and back upside with 5 bars confirming. Again, similar picture. NQ, not with many MML levels higher. As we can see, the bigger picture, if we go back again to the ends of 2018 here, and the bounce off the oversold. Price action crossed back over on the 1050, gave us a nice rise upside as we've been holding above the 200 all along here through August and midsummer. But really having a hard time breaking through back upside. Short-term resistance here off the 200, as well as the resistance of the midterm here, and headed back upside to test those highs. So again, a little bit more room for the end of the year. Again, I'm looking for a reset on those NQ levels to see if we can get any levels higher like we had on the ES. Overall, big picture, which I usually like to start out with, but let's go ahead and take a look at the overall stock market index, as we can see here on the VTI. Again, similar picture as we had the downside. Again, no confirmation secure back on the upside yet, as we really bounced off these upper levels, and we got a 1050 crossover, still holding above the 200. So again, a lot of consolidation there on the total stock market index. Again, leaves you with a little bit of uninsured feeling of, is it up, is it down, and whether you should just stick to the intraday or take a position for the short term and swing maybe 2 or 3 days instead of just a single day. Taking a look at the FFTY again, hasn't been as pretty as the others. Has been market action been really pulling back. So again, if you're trading the ETF here, you've had a nice solid pullback here as it bounced off the major support and short-term MML. Again, not as a beautiful a picture and secure a picture of we're headed upside as we see the 10 crossing the 50 here and still not able to get back above that 200. So at least from the IBD 50, which has right now an uptrend under pressure outlook with 50% invested in the ETF strategy, even together with the bulls versus bears, still holding upside, still a psychological market chart indicator showing that we're holding in an uptrend. Overall picture, we'd like everything to be in sync, and right now we are not there yet, and that is obviously very clear when we take a look back on our ES chart here. We could see just that consolidation, that unsureness of should we head up or should we head down. But all indicators being equal for the most part, with setups there on the HA bars, that's the easiest way, as I say each week. If you're trending up, that's a great opportunity. Once you got that price action crossing the T3 moving average, that's your earliest opportunity, whether or not you have all the bars down below. Right now, we're in a quasi, this thing could easily turn around on a hat or dime, whatever you call it, and back down sides to test the major support 2812. But as long as these trending HA bars continue to move up, then I say we're going to test these upper levels all the way up to possibly 30.47. Again, if the intraday works for you, again, similar picture here you can see on the ES there on Friday. You can wait for the highest probable strategy setup strategy here with all the bars in sync. Grab yourself a ride there up to the MMLs, a little bit of pullback, hold you in, and then even test the upper levels again. I'm running two levels here, a little bit of a longer, which is about a 2-day MML, and then the 1-day MML, which gave us a nice bounce off of major support and upside for Friday's trading session, which came in play with all the rest of the indices. So supporting in my outlook using the Jason Kelly strategy, rebalancing the portfolio, which he uses the bonds and the IJR, MBV, and the Schwab bonds, as well as TQQQ and AGG. Combination of those, whichever one you choose, as we can see here again, the same similarity in the index consolidation at this point, but not paying attention to the intraday stuff, but more the long-term stuff. Feelings from his camp that obviously GDP growth at this point from the St. Louis Fed last week, no signs of any recession. Looking for a number around 2.9. Risk aversion's high, which is bullish. The S&P 500 yielding 4.6 compared to only 1.5% for the 10-year Treasury. So again, some of those notes in my newsletter blog this week, giving us an overall confidence that we might be consolidated. It might take a couple weeks to get us moving here, but we're looking at a much stronger Q4 here. From our Heikin-Ashi trends at EducoFin, S&P 500, positive signs, daily oscillators, yearly, a bullish looking for a new year high, and then overall S&P 500 trend, also positive, medium, we're at tops and long-term resistance. Again, you can subscribe to their newsletter at EduCofin. All right, headed into this week, looking for economic calendar. We got Jerome Powell, speaking on Monday, Tuesday, Wednesday. So look for market volatility perhaps there. Fed speakers throughout the week. You see the FOMC minutes there on Wednesday. CPI, core price index, again, a key economic indicator of direction of market. So again, that's something you want to watch too, as last week, Tuesday and Wednesday, U.S. export and manufacturing data had weakened a little bit. Those are some core economic indicators to see how our economy is going. But usually those kind of numbers in October usually tend to follow by a good month and a good quarter, where manufacturing actually only accounts for about 12% of the GDP. So hopefully that number will pick up, but it's not an account for all of that. As far as earnings this week, we're headed into earnings season. Delta Airlines leading off the week here. Nothing, no star-studded earnings this week, as we'll pushing the third week of the month, we should start to see some of the bigger numbers towards the end, as well as pre-China trade tariff meetings coming up. So that I'm sure will move the market in either direction. And then, as I said, the FOMC minutes on Wednesday to get a little deeper insight into if we're going to get another rate cut for the remainder of the year. All right, Jet A traders, that is it. When it comes to choosing platforms, everybody's got their favorites. So again, we're going to, as we saw in the news this week, brokerage commissions are disappearing from E-Trade, TD Ameritrade down to zero. Fidelity and Vanguard, I'm sure, to follow. This does not apply in the futures market, but it applies surely in stock trading. They're not going to use commissions anymore, so we'll see what happens there. As far as the Sierra charts, big fan of them. Unfortunately, with the brokerage house that we're using, they're not supporting the Sierra charts as much anymore, moving to other platforms. So currently seeking a new house for Sierra charts. So see some changes in the charts in the next couple weeks, but hopefully not too much. Hopefully be able to keep it the same look. Tough to find charts out there with Flex Renko bars and MML charts the way we have them. So stay tuned. I don't see much change other than maybe just the data feed at this point. Hey guys, have yourselves a great week. This is a conclusion to my weekly trend, my technical momentum of the indices. Feel free to stop by anytime at my website, tradingfibs.com here. Been doing this for a while. Or my social media outlet, where you can also obtain some more information. But the mantra remains the same: one simple strategy, any market, any chart, any time frame. Should keep you disciplined. You can find me not every day, but you find me enough on Twitter, charts, keeping in sync with the market and trend. Always follow me, Trading Fibs. I leave the crystal ball to the experts. I only see what's in front of me on my charts and give my ideas and analysis. I always leave my bias at the door. Hey guys, have yourself a great week. Have yourself a Blue Zone week as we head into the fall, favorite time of year. Wherever you may be, have yourselves a good day, good night, and good trading to you.